Hello, can you hear me? All right. So basically, I would simply open a new chat for you for the purpose of this training. I would simply be opening a new chat. Now, on your PC, there are two applications or two web browsers you use in opening up to analyze your chart, your trading chart. Are you with me? Yeah. So one is Trading View. One is Trading View. So click on that one, and then excuse me. And then we select either you choose select trading view track all, but I majorly check for chart. Now why I select this chart is because it just gives us, it pops up the main chart for us. So that's why I select this. So when I select it, you see that the interface gets to show. You understand? So actually for me, I prefer this color, so that's why I set it to be this white and black color. Are you with me? Yeah, so now, yeah, so while that is running, another browser will make use of, or another website will make use of in analyzing the market is what we call trading view. It's what we call trading view implementation. So trading view implementation is the next one we use. We click on trading view derive advanced trading chart tool. So when we click on it, you see how it's open. So this one is what I use in analyzing like the trade I took today on step index. That's what I use in analyzing it. So this is it you get. So this is what we have on TradingView implementation. Now, what are the pairs it allows? It allows you to be able to trade the currency pairs. So I think some currency pairs are listed here. Not all the currency pairs, but most of the currency pairs are listed here. Then most stocks are listed here, S&P 500 and some of them. Then we have commodities, we have the derivative pairs, and we have cryptocurrencies. Now, for cryptocurrency, just two cryptocurrencies are listed on this particular platform. So, what is the major use of this platform? The major use of this platform is for trading these commodities, these derivative pairs. Are you with me? Good. So now, for me, I focus on trading what we call the volatility 10, which is this market. Then I'll duplicate it and duplicate it again. Now, on this second phase, I just opened three different tabs. Now, on the first tab, I trade volatility 10. I use it for analyzing volatility 10. Then the second tab, I use it for analyzing the 5. Now, for the last, I basically use it to analyze the step index, which I'm in serious profit on that one today. I mean, massive profit on this one. So these are the tabs I use for analyzing. These are the pairs I analyze on the volatility sections. Are you with me? So now, moving forward to this, moving forward to this particular section, which is the main chart. This chart is actually what we use in analyzing these commodities. Let me show you the comment. So basically, we use this chart to analyze. Hold on. So we use this chart to analyze the stocks. So now all these listed here are stocks. Okay, no, because I noticed it's not correct. Yeah. So all these are stocks. Are you with me? So these are basically stocks, and all these stocks, as I explained earlier, are companies. So if you look at it, you can see Amazon. You can see this is Amazon stock, this is Apple stock, this is Tesla stock, this is Nvidia, this is Microsoft stock, then this is actually Palantir. Now all these stocks here are stocks I've recently checked. That is why you can see them up here. Now CrowdStrike is also one of the stocks I've checked recently. So now what I'll simply do is I'll simply put it on the higher time frame. So this is basically the chart. It's me. So this is basically the chart on this particular stock. So basically, this is CrowdStrike. So this is actually it's basically a software company you get. So this is their stock. All these levels here, let me use this too. So all these levels here, these levels we find at this point, they are all called price, market price. Are you with me? Yeah, so all these levels you have here, they are all called market price. Now, if I want to flip it to what the value is at the current exchange of Naira, I simply will just flip it to and select house. Now, let me show you where I clicked. I clicked on this, above this 400, I clicked on this section where you have USD. So when I click on it, it shows me the options of different currencies. Are you with me? Both cryptos and all of that. It shows me the options of different currencies. Now, I simply, let me say I want to check in Naira what the value of this particular stock is in Naira, a unit of it at the same time what people will call a share. So if you're purchasing a share of this commodity, which is stock, you're going to be purchasing it for 473,563 naira. Are you with me? That is what this particular CrowdStrike stock is selling for at the moment. Are you with me? So now let me give another example. Like this is one I'm actually holding. I have a stock on this particular. I actually bought this stock earlier on when it was around 30, $37 thereabout around here. So now this particular stock, this is actually what we call the PayPal stock. Are you with me? So this is actually what we call the PayPal stock. So now PayPal stock is the normal PayPal you make use of. Are you with me? Hello, if you can hear me, I would like to. Hello, can you hear me? Can you hear me? All right. So this is actually what we call the PayPal stock. So let me delete all the drawings here. So this is what we call the PayPal stock. Now this PayPal stock is basically the PayPal you make use of to handle transactions if you do make use of PayPal. Alternatively to Bitcoin. Are you with me? So this PayPal stock, yeah, so this PayPal stock currently, if we it's currently selling for $79 and I bought it actually when it was around 50 dollars. You understand? I bought like about is it there about 20 units or so of it, 20 shares of it. So I'm already in massive profit, but I'm intending to hold it up until it gets to this point. So that's actually my main goal. And I've calculated how much I'll be making if I'm able to hold it from here to this point. Now that is like holding it. It's not going to just do that all of a sudden. It's going to do this maybe between it may move fast, which is it can do that in a year, and it can also do that in like 2 years or thereabout, or even 5 years. But I don't mind. I just would hold it. This is a good point to get in. Now, why? Because this particular stock, which is PayPal, they won't want to see their company run down to zero. You get what I'm saying? So they won't want to see their company run down to zero. That's why investing in stocks most stocks is fine. It's okay. You get? Now, and I did a calculation with some of the students who came around for me to teach them today. I did a little bit of a calculation with them on this particular stock, showing them the kind of profits they could make being invested in this stock. So let me give you an instance of like an example of what I showed them. Now I simply said something. I said, okay, if for instance they purchased this stock at, let's say, let me just give you a fresh instance. So let's say you purchase this stock at 50, at the price 55. Are you with me now? Yeah, so if you had purchased this stock when it has price 50, when it is at price 55, what we'll simply do is we'll simply say 55.86 minus 79.84. So we simply come here and we make use of our calculator. Now I want to show you an estimate of how much you will be making with that particular stock if you had invested in it at a particular time ranging to this particular point in time. So now if you had invested in it here, which is 55.86, so we'll come here 55.86. We'll simply say 55.86 minus 79.84. So it gives us 23.98. Yeah, so we can round this as 24. We can just round it up to 24 normally. Now we can now say, yeah, so if we put that in naira, okay, good. I want to do a calculation so that you get it in naira. So let's make, I'll put it up so that you can get this calculation in naira and understand me better. Are you with me? So switch it to naira. So let me switch it to naira so that we don't get confused based on rate and all those shit. So let me select weekly time frame if that will help better. Let me see. I know whenever I switch it to naira, it doesn't give me the full chart. It won't give us the full chart. So, well, it's all right. Let's carry on with our calculation as we've started. So now, yeah. So now, if you had invested in this particular stock when it was at 55 and then it's currently here, you would have made profit of about $24 from here to this point. Fine. Now, let's say you bought a 10 units, which is a 10 share of this particular share. That means we'll simply say you got 55 times 10. That means you purchased, let's say that means you invested 550 dollars in it. You get. So now if you invest $550 in it and you held this particular stock up until from this point to this point, we'll simply just times the 24 times 10, and then you see the profit you would have made from just purchasing it and holding it, not even doing any analysis or extra analysis and everything. So simply say 24 times 10. You see that from just investing $500, you have almost made 50% of your deposit. I don't know if you get what I'm saying. From just purchase, yeah, so from just purchasing this particular stock at this point here and holding it up to this point. And it has not even gone 1/10 of where we are anticipating to get up to stock to get up to. It has not even started the movement. So you can imagine holding it from here now up to this point. I don't know if you are getting the point I'm trying to play. So you can imagine investing in this, yeah. So you can imagine investing in this stock now, holding it. Even if you put only $100 or you put $150, you can just even buy only 2 units of this stock and hold it freely. You will be making free money just by holding it from there to that point, depending on how many years you wish to hold it. Now, it doesn't still mean that the stock might not drop in price, but even if it drops in value, in as much as you bought a unit of it, which is above 79, you will rarely lose your money. So the only time you can lose your money is if you're when the company loses all the trillions of dollars invested in this particular company, which I believe you understand that they won't allow that to happen. You get? So it will rarely happen. It's rarely on rare occasions. You say? Okay, good. Now, if they sell the company and those whom they sold the company to actually still operate this particular stock without changing the name and all of that, it will still remain. Are you with me? Yeah, it will still remain. No, if they change the name, it will remain. Let me give you an instance of that. If you remember, Meta was actually called Facebook. But now, can you see that the name has been changed here and it is called Meta here? Are you with me? So this chart was formerly Facebook chart, but now you can see they have done the editing and then it's now Meta. Now, Meta, which is Facebook, a share of in Facebook company actually is almost $600, which is $585. That is what a share in Facebook currently worth. But now, is it advisable to come and buy here? No. With the strategy I'll be teaching you, you will understand that if one even wants to invest in this particular stock using our Fibonacci retracement tool, ideally what you would want to see is you want to see, okay, let me delete all of this. Ideally, what you want to see is one, we have a break of structure here. I'm just giving you a rough analysis, trying to give a scheme on this particular one. Then we have here as our point A, we have here as our point B. Then we have here as our point A. So what we simply do is we'll be marking our zone from this particular area down to this point. For instance, I'm giving an instance where if we see a rejection here, but we've not seen a clear rejection from this point. And then we'll be looking out for markets to do what? To come into these levels, into here, for us to take our first shot of buy. Then if market hits our stop loss, for instance, we'll be looking at taking our next shot of buy here. But now, for investing in stocks, it takes a different turn. We are not just doing, you can do it that way in terms of investing, using those calculations. But for stocks, I just prefer, because it's a long-term business, I just prefer you buy a whole of it, a whole unit of it. At least once you are able to invest more than what the company is selling a share for, you are good. You get, so that is it. Now, for instance, let me give you another instance. Now, you can see this is Coca-Cola. I'm just giving you a rough rundown on all these things so that you are able to get and understand these things well. Now, this is Coca-Cola company. The Coca-Cola we all drink and everything. This is their company and this is their stock. So if you had invested in this stock earlier on, let's say even in 2000, around 2000, which is around here, you would have been in profit. Like, okay, let me know. I'm just trying to give you an analogy. You understand what I'm saying? So yeah, so if you had invested, if anyone who understood about the chart invested on this particular coin, on this particular stock, which is Coca-Cola at this area here, you can imagine all the push that it has made. It has made all this push. And currently it's still pushing to the upside. Currently is dropping a little bit. So now, this is just to show you how this chart actually they behave. You get. So now, I would explain. So this is for stocks. So I think that's enough in terms of showing you stocks. This is Apple stock, and what Apple stock is currently selling at $222 per share on an Apple stock. Then we have Tesla. Just giving examples. We have Tesla. Sorry, let me. Hello, please. I'm in a meeting. I'll call you back shortly. Thank you. So we have Apple stock. Okay, this is Tesla stock. So this Tesla stock, is it ideal? Is it okay to invest in this Tesla stock? I just did a lot of analysis here. Is this a good stock to invest in? Appropriately, yes. Like full yes. Are you with me? Now, if I'm investing in this stock, yeah. So if I'm investing in this stock, what will I be doing? I'll simply be investing, let's say, $100, or I'll invest a $200. Now, I can also invest like the minimum I would prefer to invest is investing $250 above. So you can invest $400, $300, $500. Now, what is your target? Your target is when you invest in this stock, you are just going to be on the watch out. Okay, so let me click here. So when I click that place, it shifts the chart so that I can see it clearly. So now we can clearly see that on this chart, the market has actually been moving from, it has been moving from this area here. Then it moved up, moved, came up, it came into this point, pushed up again, came down, pushed up, did this, pushed up, came back down, and now it's pushing to the upside. Where am I seeing it moving to? This is where we're looking at. So we are expecting it to get into this area before doing any other thing. But now we did not blindly just expect that it will go into this area. Now let me give you let's now do what I'll call analysis on this. But before I'll just do my basic analysis on it to explain to you the reason why I look. Then then remember we'll still go about today what I'll be showing you is I'll be showing you market structures. You understand? The various types of market structures we'll be looking at. Now, having done this, we understand that market gave us a push to the upside, which was from this point to the upside. Now, in the midst of this push to the upside, it gave a push, gave a base here, rally, gave a base again here, rallied, gave a base here, pushed up again, you understand, before dropping back down into this area and then rejecting it and started moving up. Now, since it rejected this point and started pushing up, this is what we look for in the market, and then this same strategy you can use it on for a buy. You can use it to catch a buy on both the stock market, the currency pair market, the index market, crypto market, any market at all you want to analyze. This strategy works on all of them. Are you with me? Now, what we look out for is, first, we look out for the break of structure on this market. And then when we look out for the break of structure, we are simply going to be waiting for market to retrace from this high down, and then we will be taking our buys. But now let me show you how I'll be taking our buys. Now, on this higher time frame, we've seen the information we want to understand. Now we already understand that market is in an uptrend. Fine. What we ideally do when we're analyzing is we'll now go to the smaller time frame. The smaller time frame is now to help us get a better understanding of the market. I don't know if you get what happened now. As I went to the smaller time frame, you can see that the chart became a little bit brighter and a little bit clear, right? So now what we do is we simply would mark from this low with what I call our Fibonacci 2. But this our Fibonacci 2 comes with a setting. Are you with me? It comes with a setting. The setting actually is what helps us to be able to take calculated risk on the market. Now I will explain. Now our Fibonacci 2 comes up with certain settings beside it here. Now in order to explain how you're able to use these settings to take entries, I would explain that when I'm teaching you how to set it up and everything, but I'll just give you an example, an analogy on what we do. So now when we mark our zone between this low, which is the support, which created the high, and then this point here, what are we looking out to do? We are looking out to take our entry from what we call the 0.618 level or the 0.78 level. So now this is how the entry looks like. So the first trade, okay, now to look at where we are supposed to look at, 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 where we are supposed to look at our take profit. But because we've already seen it, extend my take profit to this point. You understand? But then this is the ideal place to look out for our take profit. Now, because I already know what I'm looking out for, I extend it to this point. Now, where am I supposed to put my stop loss? My stop loss is supposed to be exactly at this point. So if so if so if you can see what happened on the chart, the first entry got stopped out, which means my first entry, my stop loss got hit. So I lost money on that particular investment if I were to be treating it as a normal trade. Are you with me? But that is where the benefit of treating it as a stock comes in. If I'm treating it as a stock, I would actually benefit of it. You understand? If I'm treating it as a stock normally, it will not hit my stop loss. I will still be in the trade because, let's say for instance, I bought it when it was at this price, which is when it was at price 176. So imagine I purchased 176 above, let's say $177 or $200 of this particular stock. If it reduces down to this point, I'll only be losing like, let's say, $30 or thereabouts. You understand? And then the moment it pushes back up, I'm beginning to make money. So it's this one stock is actually, that's the good thing about stock. When you purchase it, you're holding, it gives you a holding power. You understand? Once you're able to purchase at least a share of it, a unit of it, it gives you a holding power to be able to hold that stock. And because it's a long-term investment, you are able to hold it and remain in the business. Now, the gain it gives you is not as profitable as your normal day-to-day trading would actually look or be like. Now, ideally, if you are doing normal analysis, as I said, it will hit your stop loss and then trigger your next trade by touching this line, which is where the moment it hits your stop loss, it triggers the next trade. That is how our strategy works. Now, when it triggers the next trade actually got triggered at this point here. And then our stop loss, ideally, using our technical analysis formula, is this way. Then our take profit is here. So now, what are we simply going to be doing? This is where our take profit is. So we now got logged in on the next trade, which we didn't even get much drawdown, and the market started pushing up. So what are we still looking out for? If we want to just take an entry, we can only do what we call taking a re-entry from this area and then purchasing this Tesla stock. I will see if it's able to retrace a little bit into this point. I think I will purchase Tesla stock. Maybe I'll just put in a $200 into this stock and see how it goes. Now, on this particular one now, using this particular one, the risk to reward is now different. Ideally, this pattern, this trade actually gives you a 1:1, okay, a 1:3 risk to reward ratio and a 1:4. So if I were to use it the normal way, ranging from my entry to this point, this is where my take profit is supposed to be. It will give me a 1:3. And then from this point, it will give me a 1:4. But because I already understand what the market is doing right from this trend, understanding the trend, that is why I'm targeting this point. And then it's going to give me a 1:, I think that is about the, let me see what it gives me here. 1:6, about 1:7, which is this. You can see it. When you see this, you see what we call risk/reward ratio. Can you see it? Yeah, so that risk/reward ratio, you see 6.76. So that is this. We are risking, that simply tells you that we are risking 1 ratio. What we are risking, we are making, yeah, 6.96. So what we are risking, we are making it times, we are making it 6 times plus, like we are making it 6 times with an extra value of 9.996. I don't know if you get what I'm saying. Good. Now, I always try to explain I try to go detailed when explaining. Now, on this other one, we are simply risking what we are risking. We are making it the same 1:6.00, but at least with a higher value and all of that. So that's just the whole thing around this particular stuff. I'll leave this like this. Maybe later I would come back to it and I would do a kind of what we call a re-entry analysis. A re-entry analysis is when I'll come down. You would get to learn all of that. When I'll come down, that is not what, but then that is not what we are doing now. 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 So now that I just did is just giving you. I just simply told you the types of markets we get to trade. You understand? Now I said we trade the stock markets. We trade the, you can see features here. These are features. Let me erase this. So these are features, these are funds, these are stocks. Then we have this the currency pair. So you can see, let's say for instance, we click on the currency pair, Euro USD. So Euro USD, this is the monthly time frame. So if you look at the monthly time frame, what we can clearly see here is that the market is on a downtrend. You understand? So since it's on a downtrend, ideally what we're supposed to be doing is we're supposed to be looking for more of selling positions. But when we refine the chart down to the smaller time frame, we will begin to see the market clearly and understand what exactly we'll be doing. You understand? So now today what I'm actually going to be showing you is I'm going to be teaching you the different types of trends we have. Are you with me? Yeah, so I'll be teaching you the different types of trends we have, and that is just all I'm going to be teaching you. I'm not going to go beyond that. On our next lectures, I will make it, I will go a little bit deeper. You understand what I'm saying? On our next lectures, I'll be going a little bit deeper, but I don't want a situation whereby I would overcomplicate things. Now, yeah. So now, when we talk about market trend, we have three different types of market trend. So one is what we call the uptrend. The uptrend actually gives us, are you with me? So this is an uptrend. Yeah, so this is a kind of replica of what an uptrend looks like. Now, an uptrend simply does what we call it creates what we call a higher high. This is basically a high, you understand, which is the first level, and then the next level, we simply call it a higher high. So the next level, we simply call it a higher high. Then the one above that one, are you with me? We also call it a higher high. The one above it also, we also call it a higher high. You get what I'm saying? So when understanding an uptrend, it starts with a high, then it gives you a higher high, it gives you a higher high, just like that. So that's how it is. It's an ascending formula, or it's in an ascending way. Now the next one, this is actually what we call a low. You get the point at the bottom is called a low. Then because it's in an upward trend, the next level, it's now called a lower high. You get? Now, yeah, so the next level after that side is basically called what? A lower high also. When we go a little bit further, the next level still gives us what? A lower high. So now, if you look at what I'm doing, I'm trying to basically help you understand it step by step. So this is actually what we see on an uptrend. Now, some persons will now come up with telling you, okay, that's where you will now see some persons say an uptrend, they now draw a line. Now, this line actually is trying to help you understand that, okay, you are in a particular uptrending wave. You get what I'm saying? Good. So now I will delete these ones, and then we go for the downtrending symbol. So now the downtrending symbol actually gives us something like this. So this is how we get the downtrending symbol. So now what do we have? On the downtrending symbol, we have what we call a high, and then we have what we call, if you, a higher what? Good. So it's what we call it is, because it's a downtrending market, we now call it a higher low. Sorry, 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 a lower high. Are you with me? We call it a lower high. Then the next one below it, we call it also a lower high. The next one also, we also call it a lower high. So that's how it's actually in a descending form. In each of the lows we find below the high, we call it a lower high. You get? Yes, I'm with you. Very good. So now the lower low actually is at the bottom. So on the one now below that one, are you with me? The one below that higher high is what we now call our low. Are you with me? We'll call it our low. Then we now go to the one below it. We'll now call it our lower low. The one below that one again. The one below it again, we'll call it our lower low. You get? Then we'll call it our lower low. So you see, this is how we get the structure of a downtrend. You get? So now, 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 in order to go a little bit further, you understand? To go a little bit further, we would delete this. And then we talk about what we call the range. Now, a lot of people, they love to avoid trading this kind of structures. So you see, it's so scattered, it's not in any particular form. Are you with me? So for these ones, what you simply will call the levels at the top, you simply call these highs because they are all at the same level. I don't know if you get what I'm saying. Are you with me? Can you hear me? Network.